Hey traders, this is Blake Morrow, and you are listening to the week ahead video for August 8th, 2021. Hope you guys are having a great weekend. I have some actually housekeeping things to talk about before we get into the markets. Big moves on Friday following the jobs report. We're going to talk about that too. Also, we're going to talk about Bitcoin moving towards the 200-day moving average, finding resistance as of the time of filming there. Now, if you like these videos, make sure you give us a thumbs up, because hopefully you enjoy the videos that we produce for you for free. And then if you like this type of content, you like the analysis that we give, make sure you subscribe to the channel below so you don't miss any of our training that we put out, any of our great interviews, and obviously the live analysis that you see and love every day for many years. So let's talk about a couple other things too. Actually, if you have not tried ForexAnalytix, this is the time to do it. We have offered a discount that we haven't offered since the beginning of the year. We haven't had a discount on our packages, since the beginning of the year. But because we have merged with Forex Flow Live and their team and brought them over into the ForexAnalytix family, we've offered you guys a discount so you could take advantage of not only having the features that ForexAnalytix has always offered you, but now a lot more market commentary, options in the currency market, order boards, all sorts of flow information that comes through the Forex market. You can get that too. So we have a buy 1 month, get 1 month free, and we have discounted amounts on your semi-annual and annual subscriptions, because we know a lot of you are loyal subscribers and you want a discounted amount for being with us for so long. So we offer that. We also have the light version. Remember, when you do use ForexAnalytix, make sure you download the mobile app. This way you have all of our notifications on your person when you're out and about. Also, I need to mention that we are rewriting the app right now. I know our developers have pretty much finished it up. They're testing the app at the moment. So it's great. We're just adding these new features for you guys on your mobile devices. It's been a few years since we've updated the app, so it's due. But the app that we have now, we use it. I use it on my phone, and I love it. All right, now let's talk about this last. Well, actually, let me stop there for a second. Let's talk about Bitcoin. So Bitcoin rallied past some resistance. This is a previous support. It was acting as current resistance the first time around. You'll notice the first time that we hit that at the end of July, we hit the 42,600 level. We've been noting that level for forever and a day. That's, you can see this resistance zone. But if you listen to my daily analysis, especially if you're ForexAnalytix subscribers and you get private webinars with our team, I'd mentioned, hey, if we ever break 42.6, then that 200-day moving average, as long as we stay below that, it's bearish. Well, today, it's the weekend, and it's Saturday, and we are testing and have rejected the 200-day moving average. Does that mean it's going to hold? I don't know. I don't know. By the time you're watching this and Monday kicks off, we could be above the 200-day moving average in Bitcoin. We could be back below the breakout point, which would be bearish, by the way. If we came back below 41,000 or so, that would be bearish, because that means we are really struggling at the 200-day moving average. A break above the 200-day moving average, we might be seeing 50,000 again. So just keep that in mind. Ethereum, similar situation. We hit 161% extension. I thought I was going to stop there. It did for about 12 hours. Then after that, you can see we've broken higher out of some resistance with Ethereum. Looks like we're going to about 33.5 at least, maybe even higher. So, but that's going to be predicated on what's happening with Bitcoin. So I needed to mention those two things with cryptocurrencies because it is the weekend. They are moving and you should be paying attention to them. Now let's talk about the price action in the currency market. So on Friday, we had our jobs report. It was a good jobs report. We created 943,000 jobs. Unemployment rate dropped to 5.4%. That's a good number. Of course, the Fed wants to see pre-pandemic employment back below 5%. Of course they do, but this is a big improvement. And based off all the emergency liquidity that the market has been provided, this, in my opinion, argues tapering. And so the dollar strengthened, but you know what didn't happen is you didn't see stocks stop going higher. Stocks continue to blaze higher. And I know we've said this and we'll continue to say it. It doesn't seem like anything can stop the stock market. But when everybody feels that way, that's usually when, the stock market's going to stop. I mean, it's like, wow, it's the Teflon market, right? Nothing sticks. It doesn't matter. Good data, great. Taper, who cares? Less liquidity in the market coming, doesn't matter. Stocks are going higher. But when you get to that point where everybody's like, all right, well, why fight it? You have to obviously be a little concerned. So, at this point, we've been looking for the S&P to hit 4440, which is the 127% extension of the July move lower. Now it looks like we're going to 4,500. But you know what's not happening? The dollar's not going down as a result. Matter of fact, the dollar is trying to break higher. This is some strong data that we've gotten out of the US. And guess what? This next week, we have CPI and producer prices. So we got producer prices and consumer prices, inflation data. That's what everybody and anybody and everybody in the markets, especially all of the Fed heads that are heading to Jackson Hole on August 26th through 28th, they're going to be looking at inflation data. That's all they really care about at this moment. Well, that's not all, but that's obviously a big concern. So if inflation is stronger, that's going to than expectations this week. That's going to fuel the fire for this dollar squeeze. Now take a look at the blue trend lines in the dollar index. Okay, this was let me remove this blue one here. We have the blue triangle resistance, red triangle support. We broke above that triangle resistance back in July. It failed, but notice that we've rallied back and we're back above that trend line. At this point, you have to imagine if we do break out, we break above the 93.30 level, 25 actually, 93.20s, we're going to be pushing back to 94, possibly even higher than that. The dollar, a lot like the stock market, it looks unstoppable at this point. The dollar has strengthened, and it's interesting. You hear all of these arguments that the dollar is going to hell, and all this liquidity that the Fed's provided. I mean, how's the dollar not going to zero? And the market is very bearish and has been very bearish to the dollar. But what people fail to recognize, and something that we talk about all the time on our live daily webinars called, the F.A.C.E webinars. If you guys don't know how to attend those, find the link in the description below so you can listen to us every day, just for 30 minutes or an hour, and that's the free F.A.C.E webinar that we do. We prepare you for the trading session. It's the ForexAnalytix community experience, F.A.C.E. Okay. Anyway, we've been talking about this for the last, several months, but even before that. The Fed is not the only central bank providing liquidity, right? But what the market expects is, and has expected, is the Fed is just going to stay, and Fed Chairman Powell and the rest of the Fed governors are just going to continue to stay very dovish. But what we've heard, especially over the last week or two, we've heard a lot of taper talk from not only not just one Fed governor, a lot of regional Fed governors. So you can see that all these Fed governors are kind of falling in line for we've got to taper sooner rather than later. And so the market had expected that maybe the beginning of 2001, they might taper, but now those expectations are moving. Those goalposts are moving closer to November, December. And if there is some sort of official announcement, which most people don't expect, but let's say there is at Jackson Hole. And remember, Jackson Hole has been, in years past, has been a platform for the Fed and other central banks to really signal a shift in policy. Whether they outright say it or just the words that are flying around gives the market the the idea that their policy might change. So that's the risk in the next couple of weeks. That's why if the inflation data that we see this week comes in pretty strong, well, we've got to start imagining that the dollar could even strengthen further. Will the stock market take notice? I don't know. I'm not sure about that. But let's drill through a couple of things that I want you to look at in the currency market. And I want to also take a look at precious metals. Now, again, I will reiterate, if you like these videos, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of the content. Just need to reiterate that. All right, so going to the euro. So here's the euro attacking support. And, you know, a break below this 117.50, it's probably going to open the door to 115, 116. 116 being here, 115 being here. You know what ultimately I'd love to do? And I know if you've listened to these for any extended period of time, you already know this, but let me tell you. Okay, let's look at this weekly chart. This is the 2009 highs, big broken trend line. And my opinion is, if we ever make it down to the low teens, I am a buyer. Because I do think that the dollar over time is going to go lower. I think that stocks are breaking out. They're holding up. You know, any 10, 15, 20% dip in equities might produce some dollar strength in the near term. But longer term, I think the dollar is kind of on the path to weakening. We're going to see the euro back in the 120s. You know, maybe not this year, possibly, you know, going into 2022, 2023, if the ECB will ever, in my lifetime or your lifetime, ever start to raise rates again, which they've tried it before, didn't really work. But, you know, at some point you would think that rates do go higher in the Eurozone. Well, I do think that the euro has the potential to actually move higher over time, but I would like to be a buyer at much lower levels. Now, going back to the daily chart, we're breaking out of this triangle, and that should take us back towards the 116, 115 level, maybe even lower than that. But a lot of that is, in my opinion, going to be predicated on if stocks ever come down, which you saw the ascending wedge. Hey, while we're in the wedge, it's bullish. It breaks through the lower end of the wedge. Well, then we can turn bearish near term. All right, sterling. Sterling is in a, you know, the pound's in the cable's in a flag pattern, but this might end up being some sort of inverted head and shoulder pattern if we see a bit dip back down to like 137, 138, maybe the 200-day moving average. The Aussie dollar, still bearish. If you guys have been listening to me at any extended period of time, you know that I'm targeting, you know, hopefully 70 cents, 70, 50, 71 cents. But this bear flag pattern, if you just, you know, look where it points, it does point to 71 cents. Hey, please let us get down there, because I want to be a buyer. I want to be a buyer somewhere down here. I do think that commodities are in an overall bullish cycle in commodities. I think inflation is real that we're dealing with globally. So I do want to be a buyer of commodity currencies on dips. The Aussie has not acted well, but doesn't mean I want to buy it right now. But if I can get it down to 71, 77 cents, I am going to be long. Kiwi's, you know, doing its own thing. The dollar Canadian, we had weaker Canadian data on Friday, and stronger Canadian data, or stronger U.S. data, you know, jobs report wise, in the U.S. on Friday. It's no surprise that the dollar Canadian pushed higher. What's surprising is the dollar Canadian has really been underperforming. So I think this is more of a product of strong crude. You know, if crude ever drops back into the low 60s, I think that would be the catalyst maybe that drives the dollar Canadian higher back towards 130. But right now the 200-day moving average is capping the dollar Canadian. So basically that comes in around 126 and change, somewhere around there. One of the currencies that, if you guys are in the ForexAnalytix community, you know I run a pattern in play, or I'm running a pattern in play in the US dollar Norwegian krona, because we had a lot of support here at 870. And as long as we hold above 870, which is the previous cup and handle breakout point, this is bullish. This is also, if you guys follow the Wyckoff accumulation distribution patterns, this is an accumulation pattern after a breakout. So we had the false breakdown here, retested the breakout point. As long as we're above 870, I think we're going back above 9. And last but not least, I wanted to cover a couple precious metals. Well, I'll cover gold, which, we were watching very carefully on Friday. This is the chart of the day. If you don't know how to access that, just go to ForexAnalytix.com, go over to our blog, and you can get some Spanish posts. Here's the gold blog post. You can also find it on, this is Trader Summit, and you'll find it in some of the breaking views every day. Here's the chart of the day here. You can find it there, but also analysis from all other experts in the markets. So check that out. But gold, we were looking for a breakout out of this range. So we broke below the 1790. As I've been mentioning, I think the market is very bullish gold and positioned poorly. Reason why I say that is because gold is the ultimate inflation hedge. We have inflation, so get long gold. That's the whole market feels that way. And I feel that the price action in gold has been very poor, despite the market being very bullish gold, ultimate inflation hedge, right? So it didn't surprise me that we broke through support and actually, I think, caught a lot of traders and the market wrong-footed. So once you broke through that 1790 level, the target for gold near term comes in at 1745. But the problem that we have here in the gold market now is that it is weak and it is breaking a triangle. So, gold could trade back down towards 1600 and change. That would be my opinion, especially as the dollar continues to strengthen. If you take a look at silver, silver actually there's a lot of people I don't want to say a lot, some of the people that trade silver in the ForexAnalytix community shorted silver at channel highs near the $26 level, which is great because that was a channel high. Now we're at channel support. We should find support somewhere down here. But overall, I think if gold continues to break lower, silver might be in a bigger range that'll take us back into the low 20s. So that's just some food for thought if the dollar continues to strengthen. So guys and gals, I hope you enjoyed this what is this? I hope you enjoyed this review of the week ahead. And, I hope you join me on Monday with the rest of the ForexAnalytix team on the F.A.C.E webinar. And for those of you that know Stelios Contigoulas, one of the partners at ForexAnalytix, he is celebrating his 50th birthday this weekend, over the weekend. So make sure you wish Stelios a happy birthday, especially if you follow him on Twitter. I'm sure he would love that. So happy birthday, Stelios, from me to you, from the rest of the ForexAnalytix team and the whole Forex community. Happy birthday. And for the rest of you guys and gals, I hope you enjoy the remainder of your weekend. I'll see you Monday morning. My name is Blake Morrow with ForexAnalytix. See you later.